Welcome to our vibrant community of wealth warriors. By subscribing to our channel, you'll unlock a world of financial success. Together, we'll unravel the mysteries, share practical tips, engage in lively discussions, and embark on exciting quests for prosperity. Join our crew by hitting that subscribe button and become a valued member today.
Inflation, I should say, swindles the bond investor too, and it swindles the person who keeps their cash under their mattress. It swindles almost everybody.
Step into the captivating world of Warren Buffett, a legendary 91-year-old investor whose wisdom has been shaped by his Republican congressman father's teachings on the perils of inflation. Throughout his illustrious investing career, Buffett has consistently shared his invaluable insights on this crucial topic. At the esteemed Berkshire Hathaway annual meeting last year, he fearlessly proclaimed, "We're witnessing significant inflation. Prices are rising, and people are accepting these increases." This statement begs the question, why should investors be so acutely aware of the dangers posed by inflation? Allow me to shed light on this matter. Inflation, the gradual rise in prices, stealthily erodes your purchasing power over time. For investors, this means that what may initially appear as a positive return can swiftly transform into a negative one if inflation skyrockets. Picture yourself as the proud owner of a bond that promises a generous 5% interest annually. It sounds like a smart investment, doesn't it? However, if inflation escalates to 6%, your once promising real return suddenly plunges into negative territory. Join me on this enlightening journey as we unravel the intricate complexities of inflation and its profound impact on investors. Together, we will navigate the treacherous waters of financial markets and equip ourselves with the knowledge needed to make informed investment decisions in the face of inflation's relentless grip. Get ready to unleash the secrets of conquering inflation as we delve into the brilliant mind of the legendary Warren Buffett. As prices soar to new heights, Buffett's ingenious strategies for combating what he humorously dubbed a gigantic corporate tapeworm are here to save the day. Brace yourself for a dose of puntastic wisdom that will leave you both informed and entertained. Why let inflation take a bite out of your hard-earned money when you can arm yourself with Buffett-approved strategies? Join us today and embark on a financial adventure that will have you laughing all the way to the bank. Remember, it's time to outsmart the gigantic corporate tapeworm and secure your financial future.
The problem, if you have a business that doesn't take any capital, and let's just say the dollar depreciates 90% or something, so things cost 10 times as much. If it doesn't take any capital, you can charge 10 times as much, and you've kept your relative position. But most businesses take some capital. If our utility business, just say that the dollar is worth 1/10, some years hence from now, we have to have 10 times the capital investment basically, and we get paid a return on that. But we have forced capital investment to essentially keep them in the same place. And
Number 1. Invest in businesses that are capital savvy. Buffett has always championed the ownership of businesses that generate impressive returns on invested capital. During inflationary times, it's crucial to choose businesses with low capital needs. These savvy enterprises can maintain their earnings without constantly pouring more money into the ever-increasing price vortex. As Buffett once quipped, it's like running up a down escalator, a challenge that can be overcome with the right investment choices. Number 2. Seek out price-raising champions. According to Buffett, the ultimate litmus test for evaluating a business is its pricing power. The ability to raise prices without losing customers to competitors is a game changer. During periods of high inflation, companies with this superpower hold a significant advantage. They can effortlessly offset their own rising costs by increasing prices. In fact, Buffett once mused that owning an unregulated toll bridge would be the ultimate asset in an inflationary world. Why? Because you've already built the bridge in old dollars, and now you can merely raise toll prices to counter inflation. Talk about a clever way to stay ahead. Number 3. Discover the marvels of tips. When it comes to combating the rising tides of inflation, Buffett endorses a superhero-like investment called Treasury Inflation Protected Securities, or TIPS. These financial champions pay investors a fixed interest rate twice a year. But here's the twist. The principal amount adjusts for inflation, like a shape-shifting hero adapting to the consumer price index. Number 4. Invest in yourself and unleash your superpowers. Buffett, the sage of financial wisdom, advises shareholders to invest in their own talents to maintain their purchasing power. Just like a superhero surgeon or lawyer, your education paid for in old dollars can empower you to price your services in current dollars without needing to re-educate yourself. So, why not flex your resume muscles by acquiring new skills through online resources or local colleges? Pursuing advanced degrees may require some financial leaps, but they can transform you into an indispensable employee, ready to conquer the future. Number 5. Bonding with bonds. Not so fast. Bonds are not the place to be these days, warns Buffett in his 2020 letter to Berkshire's shareholders. With interest rates at historically low levels, bond investors could face a villainous blow in an inflationary environment. Buffett cleverly points out that buying a 10-year bond yielding 2% is akin to paying 50 times earnings for a business, except the bond's earnings can't grow. It's like being trapped in a time warp while the world around you evolves. Fixed income investors worldwide face a bleak future, he laments. Number 6. Embrace simplicity and shield yourself. Charlie Munger, Buffett's trusted partner, has his own secret weapon against high inflation: limiting your wants. Munger advises shareholders to avoid drowning in consumer goods and artificial demands. By keeping your needs in check, you build a formidable defense against the unpredictable twists and turns of life. To aid in this quest, consider wielding a budgeting app to track your expenses. It will help you understand your spending habits and identify any problematic splurges before they become a recurring nemesis. So, my fellow adventurer, armed with the wisdom of Buffett and Munger, you're now equipped to navigate the treacherous waters of inflation and emerge victorious in your financial endeavors. Just don't forget to join our dynamic community of individuals dedicated to achieving financial success by subscribing to our channel and by clicking the like button. Warren Buffett's perspective on gold and cryptocurrencies as inflation hedges is quite interesting. While many consider gold to be a reliable store of value during times of inflation, Buffett takes a different stance. He points out that owning an ounce of gold for eternity will still only leave you with 1 ounce at the end. In other words, gold doesn't have the ability to generate additional value or income over time. Instead, Buffett prefers to invest in productive assets that have the potential to grow and provide ongoing benefits. He looks for high-quality businesses that generate dividends, real estate properties that can appreciate in value, and farmland that produces food. These assets not only have the potential for capital appreciation, but also generate income for their owners. Buffett's skepticism towards cryptocurrencies, particularly Bitcoin, is also worth noting. He argues that Bitcoin lacks unique value and doesn't produce anything tangible. You can stare at it all day, but no little Bitcoins will magically appear. He humorously refers to it as a delusion. This skepticism stems from his belief that investment should be based on the underlying value and productivity of the asset. Considering the current spike in inflation, it's important to assess whether it will be a temporary phenomenon or a long-term trend. If you're concerned about rising inflation, following Buffett's advice can be beneficial. Investing in high-quality businesses with low capital needs allows you to participate in their growth and potentially benefit from increasing dividends. On the other hand, avoiding low-yielding bonds that don't adjust payments with inflation rates can help protect your purchasing power. So, instead of relying solely on traditional inflation hedges like gold or speculative investments like cryptocurrencies, Buffett encourages a focus on productive assets that have a track record of generating value and income. By making informed investment choices, you can navigate the uncertain waters of inflation and potentially secure a brighter financial future. As we conclude this discussion on Warren Buffett's perspective on gold, cryptocurrencies, and inflation hedges, let me leave you with an outro question. Are you ready to embrace Buffett's approach and invest in productive assets that have the potential to grow and generate ongoing benefits? With his emphasis on high-quality businesses, real estate, and farmland, you can align your investments with the underlying value and productivity of the assets. You can comment your answer down below. Thank you for joining us today as we explored Warren Buffett's perspective on inflation and investment strategies. Remember, when it comes to protecting against inflation, Buffett suggests steering clear of assets like gold and cryptocurrencies and instead focusing on productive assets that generate income and dividends. So, whether you're considering investing in stocks, real estate, or farmland, it's important to make informed decisions that align with your financial goals. And hey, while you're at it, why not take a page out of Buffett's book and avoid staring at gold or Bitcoin all day? After all, they won't magically produce more value. As always, we're here to assist you on your journey towards financial success. If you have any more questions or need further guidance, don't hesitate to reach out. Remember, it's all about making smart choices and embracing the power of intelligent investing. If you found this captivating journey through the intriguing realm of finance enjoyable, don't forget to give that like button a friendly tap and subscribe to stay connected for future captivating content. Your support truly means the universe to us. Until our paths cross again, embrace your curiosity, continue to expand your knowledge, and let the adventure of learning never cease.